Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, professor of business at Chung-Ang University. Professor Song, thank you for making time on this Friday.
Yeah, thank you for inviting me again, Devin.
Well, stocks in New York were back up overnight, in part because of a surge in China's exports. What's the story today in the markets?
I think overall the global market, stock market has shown the surge of the indexes, so including Dow Jones, Nasdaq, S&P 500, and the over interest is the crude oil futures also increases. So this reflects the expectation of the recovery of the trade and the Chinese economy. That is reflected in the crude oil futures price increase. However, a week ago, I have seen that domestic market in China, particularly real estate has shown recovery, and the traffic jam has revived. So that might include the domestic market also recover in China. So at least that is good news, and trade conflict between U.S. and China will be ameliorated for the time being. So that's why the stock market has shown some positive response all over the world.
Indeed. Well, the Korean won has gained a bit against the dollar in the past few days, but there's so much uncertainty out there. U.S. unemployment numbers coming up for April, for one thing. Where do you see the exchange rate going?
Yeah, I think the March jobless in the U.S. has recorded a 4.4%. So that is a very high drop of the increase of the unemployment rate. But particularly some people, and including the Federal Reserve Bank chairman of Minnesota, Mr. Kashkari, has expected the April unemployment rate could be reached 16% or 17%. Even some people claim that could be 23%, 24%. So we have to wait and see, because in several hours we are going to see that the April jobless rate and unemployment rate in U.S. that could be reflected in the U.S. economy, prospect of U.S. economy. However, because of some early response by the Federal Reserve, dropped the Federal Reserve rate to 0, and they are going to maintain that posture until the coronavirus could be overcome. So that at least it could have a negative, but for the time being, the effect would be just a midterm, and then the all U.S. and including U.S. and the China economy is expected to recover.
Well, now the Korean government posted its biggest ever fiscal deficit in the first quarter. We're expecting a third extra budget sometime soon. Tell us about that and what impact it might have on fiscal soundness.
Yeah, actually, the deficit of 54 trillion won has been recorded until now, and that totaled government debt against our South Korean GDP is 36.5%, which is equivalent to 699 trillion Korean won. However, it does not have a much impact over the government deficit or debt level, because when compared to other countries, it's very low. And the fiscal package for the Korea has it used to be a 5%, is a little bit, but however, it is increased because of the supplementary budget has been added up to support the coronavirus affected people's payment compensation. So it has reached 150 trillion Korean won. That is going to be a fiscal package in total would be 7% of our GDP. So still it is, we have still enough room to support the economy, and the total of 150 trillion won fiscal package will be unleashed and for the upcoming several months. So I hope this would be signal this positive aspect of South Korean economy, but we don't have to worry about the government deficit at all right now.
Got it. All right, Professor Song, thanks so much for making time today. Have a great weekend.
Yeah, thank you.